Good evening, everyone, and welcome to Setup Sunday, sponsored by CreditSpreadSlayer.com. Today we're going to be taking a look at the TBT, which is the ProShares UltraShort 20-year Treasury ETF. So what does that actually mean, TBT? So what this is it's an ETF that lets us target and track the 20-year Treasury rate. So as rates rise, this ETF rises as well. This is meant to follow rates. And specifically, we're looking at the 20-year longer bond. We currently hold a position. We'll cover that a little bit later in our Credit Spread Slayer portfolio. We have an options trade on this that expires in December. We'll cover those details in a little bit later. But I wanted to really highlight the massive move we saw on Friday with the blowout jobs number of over 200,000 jobs added that no one was really expecting. This really brings to light the fact that the Fed may in fact begin tapering in December, or at least announce the taper. We here at Credit Spread Slayer personally do not believe that's going to occur in December. We think it's going to take a few more months. That's going to be really the last month for Chairman Ben Bernanke before Janet Yellen takes over in January. And we don't see that as a huge possibility, but it's definitely out there. If we take a look at the 6-month chart on the bottom of the screen here, I'm going to go ahead and draw a little trend line here that everyone should be able to see pretty clearly that has now been broken. So we talk about channels and channel trading and really looking at the technicals of that. And as you can see, from the bottom of the top of the channel, we routinely just keep hitting and touching, hitting and moving higher, and it's a solid down channel, as you can see. Well, with the action on Friday, right here, you can see a massive break up and out of that downtrend channel. This is very bullish for rates. As we're looking at this, we don't advise anyone going long this ETF at this moment in time, as this is a overextended entry point. We're going to expect that this will trade back down and rates will fall from their around 2.7 as of the close on Friday down to a little over 2.5 again in the next week or so in order to test this real breakout here. That's when you would want to look to get long this ETF or put on an option trade similar to ours at that moment in time, because that's going to be the perfect opportunity to capture this move higher. With this trade, again, we are going with the expectation that rates will rise in the coming future, maybe not specifically in December, but definitely over the nearer term. If the Fed does taper, rates will rise faster. If the Fed fails to taper in the next few months, this could resume its down channel and fall back into the channel. If we look in the top, the same trend lines that we just drew on the bottom will be automatically appearing here. In case everyone's wondering, we do use Interactive Brokers to manage our client accounts. It's able to give us a third-party portfolio, so each one of our clients has their own portfolio, and we can review them out as a whole. If anyone is interested in signing up for Interactive Brokers, please let us know. You can just shoot us an email on the Ask the Expert page, and we'll go ahead and we'll give you a special discount code on Interactive Brokers in order to have you guys sign up with us. As you can see, the 1-year chart is also reflecting on the weekly basis the breakout, as you can see right here with that weekly break. Now, we'll do one final chart to make sure that all of our data is good and our theory is holding. And again, we can see the same channel we have driven in right here, and again, the same breakout. So this confirms our theory that we have distinctly broken out of this wedge. And again, we're going to expect it to pull back into the mid-76 here, which would correlate to about a 2.5 rate on the 10-year. So we will expect that in the next few weeks in order to test it. If we fall back into the channel, it's going to be time to get bearish on rates again. But for now, we're very bullish. Our trade, as you can see over here, we're actually doing a modified call spread with a put kicker. So what does that mean? That means that we bought a December 75 call, and we've had this position on now since about August. We bought that 75 December call, and we sold an 85 call in order to help offset that premium. In addition, we also sold another 65 call, which is way down here, because we feel in the general that rates will be rising over the next few years. It's just a matter of fact. And if we would see a shock in rates that dropped us down into those levels, we'd be more than happy to pick up some extra shares at that decreased price. But again, that was just helping us offset the premium for this trade. When we put this on, it cost us about $1.30 per share to put it on. As you can see, our break even, since we have a 75 strike, is 76.28. So anything above that, come December 20th, the trade will make money. Right now, we're sitting on a very nice gain. This is currently trading for about 3.65, so $3.65. So this is a very nice trade that's working out for us so far. Thank you very much for tuning in to Setup Sunday. If anyone has any questions or would like to see how you can look at these charts and get these trading ideas, definitely use our Ask the Expert page on creditspreadslayer.com. And we wish everyone a very successful trading week. Thanks, everybody.